So I must say, I came to Bloomberg during what I think was the summer of Greece, where every single day the sky was falling, the sky is the end of the world, and now all of a sudden we don't hear about Greece so much anymore.
And that's because if you were looking for a growth stock in terms of return, since the last time you and I had a conversation about Greece, which was 2015, you're talking about more than 200%. That's the bond market. And Greece has been the lodestar for EU resilience in the face of concerns about, the fragmentation of the European Union. Greece has been a symbol of the rebound from the financial crisis and the recession, depression afterwards. And investors around the world have made Greece the most prized debt in the sovereign bond market.
I have to wonder, how much does this say that Greece is doing well, and how much does this say that the European Central Bank is buying everything and anything under the sun, and that investors are being pushed into riskier and riskier securities in Europe?
So actually, the people who have been buying Greece since 2015, when we've had this conversation, have been mostly private investors, mostly in people from all over the world: France, Belgium, Canada, the United States, Newark, New Jersey-based Prudential is a big buyer of Greek debt going back now several years. So this is not something that's coming from a central authority. This is really a value investment. And what people are looking at is an economy that has rebounded faster since 2012, which was really the worst of it. That was when Greece was literally in the thick of its depression. Unemployment has really collapsed from about 28% to on its way 16%. Still a high number, but it's going in the right direction. And Greece has a budget surplus, by the way, and will have a budget surplus for the next 3 years. So this is an economy that is clearly outperforming just about every major economy in Europe right now.
So that debt performance is not simply the search for yield? They say, I've got to find yield somewhere, and I can't find anywhere else, let me go to Greece.
It certainly is a search for yield, but you're now talking about a yield of 3%. Literally, that's the handle on Greece, and that's down from 30%.
Did they fix all those problems we heard about, like they don't collect taxes, they spend too much money? Remember all those fundamentals we heard about?
So the next president, according to the polls, is the very person who was in charge of the reforms in the government that negotiated the second bailout. And that's pretty significant because Greece is now poised to reap the benefits of the reforms. Now, there was a big benefit that came out of that agreement, which was the average weighted maturity of Greek debt is north of 25 years. Okay. There's no country in Europe that has that kind of flexibility, that quarter of a century to figure everything out. So that's a big reason why investors are very excited about Greece at this point.